Disclaimer time. This is where I tell everyone to lighten up. It's just a podcast. Trading is like that roller coaster at the amusement park. Thrilling, unpredictable, and potentially stomach-churning. What works for one person might leave another clutching their hat in the wind. Our hosts and guests, they're awesome, knowledgeable, full of insights, but we're not financial advisors. So don't rush to make any investment decisions based solely on our banter. Always consult with a professional or do your own research. Plus, let's face it, we like to have fun, laugh, enjoy the trading ride together. It's all in the name of good podcasting fun. So remember, take it easy, don't bet the farm, and keep your seatbelts on at all times. Thank you for listening. All right, hello everybody, Happy New Year, and welcome to the China Shop, home of the Band of Traders. I am your host, Kyle, and today I'm joined by the founder and CEO of Tykr, and the host of the podcast Payback Time, Sean Tepper. If you'd like to learn more about today's guest, make sure you check out his website at tykr.com, and that's tykr.com. Or you can check out the podcast Payback Time anywhere where you're getting this one. Last but not least, please feel free to reach out with any suggestions, corrections, or questions for future guests. Do that via email at bandoftraders@gmail.com, or you can join our free Discord server where a bunch of amazing people gather to share our struggles and lessons learned with other like-minded market aficionados. All those links will be in the episode description, so you can peruse them at your convenience. But now that we got all that promotional stuff out of the way, let's get to know Sean here. Sean, how are you doing, man? How was your Christmas?
Christmas was okay. I was just telling you offline here, I had a wicked sinus infection. I wasn't COVID, but it was some kind of flu. And I sent my wife to her folks' place where I stayed home and just watched movies and TV. I worked through Andor on Disney Plus. I don't know if you saw it, but I worked through that. Really good. And then watched the new Zack Snyder film on Netflix, Rebel Moon, which was all right, but yeah, I just kind of laid low just to rest up. And here we are a few days later. I'm like, all right, I'm about 80% better. So 2 days ago, I would have had to cancel this one.
Oh, man. Well, I'm glad you're recovering. Was it the kids that got you sick or?
No kids. Something, I don't know if I got it at the gym or, passing somebody at a grocery store or what, but yeah, survived. But anyway, how's yours?
That was good. I got a really awesome Christmas present from, I think it was the wife's sister. They brought in one of those baskets of fake snowballs, and I don't know why, but that just turned out to be the most fun, having indoor snowball fights.
Fake snowballs? What's it made of?
Just like cotton. It's just like a little cotton ball, but looks like a snowball, and when they start flying, you can't tell the difference.
Does it have some weight to it?
So no, they're soft, so you're not going to break anything. I took one right in the nose when I was filming a video of it.
Okay, all right. I think of cotton balls are like light as a feather. It's like, how do you throw that?
Dense. I'll shoot you the video when we get done here. Okay. I'll send it to you.
Okay.
We're coming up. This should be New Year's for anybody listening to this. Kind of talked about my New Year's resolution on the last episode. I'm planning on starting a program called Trident Mindset, I think is what it's called. I'm going to do that for 30 days. Do you have any New Year's resolutions planned for this year?
I'm usually not a big resolution person, although this year I really like working on Tykr and a few things going on in the business, really pushed hard the last 3 months, and I think a little too hard, which might have led to me getting sick. So I'm like, I'm going to try to sleep in a little more. That's one. Two, I'm going to slow down a little bit with a business and just, I like to, for example, like middays around lunch, I like to like get out and do walks. I didn't do that like the last 2 to 3 months. So I'm going to do more of that. Like I'll plug in a podcast, go for 45 minutes. It's like, I need more me time. Let's slow down a little bit. So I think that's what I'll focus on.
I think that's an awesome, most of the time people are always trying to start a new habit or go work out more, but to take the time to focus a little bit more on you and what you need to not burn out, basically.
Yeah, right.
So nothing market related then?
Nothing market related. My main, like I invest in the stock market, of course, but my main stock is actually my business. It's a software as a service business. I have a lot of SaaS stocks I invest in, but like I'm really focused on my stock. We're hitting a momentum moment. So it's like, that's my stock. This is the direction we're going. So as far as I could talk about individual stocks if you want to get into those a little bit.
Well, I think I'd like to go back a little bit further first and just kind of learn a little bit about how you got interested in the markets in general.
Absolutely. I'll take like 2 to 3 minutes here if you don't mind and give you my backstory.
Give me the whole backstory if you want. We've got plenty of time.
Go way back to the beginning. The first movie I ever saw in theaters was Batman, 1989. But anyway, And that's true. My dad brought me to see it. I'm a total movie nerd. I love the 80s. So anybody wants to get on the subject of 80s or movies in general, usually movies from like the 80s and to today.
Are you an
I
Arnold
do some
Schwarzenegger
play.
or a Sylvester Stallone guy?
I have to. Gosh, good
I
question. I
know,
mean,
right?
Predator is so good, but like I love the Rambo movies.
Mm-hmm.
Um, but I love like Ferris Bueller's Day Off and Goonies. Back to the
Oh,
Future is like
that
I don't know if you
yes.
can get better than that.
I don't know how many times I've watched through that series.
I got to go back recently. My wife and I we just worked through the Matrix films
Mm-hmm.
again. The third one was a little
Mm.
so-so, but that first one from '99 is that's killer. And um, we're gonna start the because we've seen them so many times, but the John Wick series, like we love
I
those four films.
I think I've watched the first two. I need to go through and see
Okay,
the rest of them.
yeah. So as you and your audience can see here, we could probably talk about movies all
I know,
day,
right?
right?
Nice
Um,
digression.
but how I got into the market was kind of a interesting path. So I went to school for originally for architecture because I did architecture in high school. This was around 2001. Went to college, and the problem was when I got to college, architecture classes there were no computer classes. And in high school, it was all computer. It wasn't all, but the classes I took that were architecture related were computer aided
Hmm.
design (CAD),
Yeah.
and I got pretty good. And I'm like, I want to do that. Like I can do like blueprints and homes and corporate buildings, whatever. So college didn't have any of that. It was all model building and drawing, and that's when I quickly found out I'm not good at any of that. Because and a teacher even said, like, if you want to find work outside of school, you need to be in the top 10%. And I'm like, well, I'm most definitely in the bottom 10%. So
Hmm.
architecture was not my future. I switched to fine arts actually to get into the movie industry. It was like an emphasis on film, cinematography, and then I also enjoy screenplay writing. And I had two paths there. I could either go to the TV industry or movie industry, were the main two paths. The third path was use that to get into ad agencies or marketing firms, which happen to be everywhere. So
Hmm.
that ended up being the path I took. Got a job work for a company that was really focused on real estate. So they did a lot of real estate commercials, and I got to produce a lot of videos. And I worked there for 1 year as an agency model. And I'm like, hey, I can create this model because their revenue streams are service based. They'd make money off video commercials. They did websites and software as well. Social media really wasn't the thing, but I was like, an agency model isn't too complex to create. So I worked 1 year, figured out the model, went to create my own business, did that through did that for 4 years, and didn't make any money building small business. This is through the recession.
Okay. Okay.
Although, yeah, although the last year we started to bring on some bigger clients, and that caught the attention of other ad agencies. And it was 2010 when a larger agency said, "Hey, would you be interested in merging with us?" And I was like, yes. I was, to be honest with you, I was way burnt out. I was working like 60, 70 hours a week and not making any money. And the reason is in order to serve more clients, you have to hire more people. And I talk about this in our company a lot to our audience is like you want to be able to invest in companies where you can scale revenue much faster than liabilities. Well, we were not able to
Ah.
do that,
Okay.
right? We were adding more revenue, but adding more liabilities. So it was a team of five, and the merger wasn't like a check, like, hey, here's $1 million, you can write off in the sunset. It wasn't that. It was a situation where all debts and liabilities were wiped clean. So fresh slate protocol.
Okay. Okay.
Yep. Yep.
I was looking through your LinkedIn profile. Is that
Sure.
when they acquired you? It looks like you took on the role of vice president at the new company. Was that part of the agreement?
Correct. Yes, at the larger agency, VP of marketing, I think.
How much
Um,
bigger were they than you?
gosh, that went from 5 employees to about 40. And revenue wise, they were a company that were doing probably multi millions, but I
Hmm.
don't know if it was 10 million or more a year. And they had been around 40 years, and they had some major clients, like even some Fortune 500 clients under
Hmm.
their in their portfolio. And they did more than what we just did. They like we kind of came in and really leveled up their tech side, so IT, websites, video. like that took that division to another level in their company. But they were also very good at like trade shows. They
Mm-hmm.
would build these giant trade show. You could call them kiosks, but think of them like the size of a house. Is
Oh,
pretty. I mean, we're
wow.
talking to build one of these was like multi 6-figure project, and then setting them up, tearing them down, going to other trade shows. So that was their main revenue model, actually.
Hmm.
It was, and to give you context here, after that merger, I was actually pretty frustrated with myself because I'm like, I went 4 key years in my 20s making no money and saving no money and nor investing no money. I was so mad at myself.
Mm.
But those like 2 years later, I'll kind of pause there. What I did at that moment is I knew the type of business I wanted to get into, which was SaaS, scalable business. I was looking at Netflix,
Mm-hmm.
MailChimp, Salesforce. I'm like, I want a subscription model where I can increase revenue without increasing liabilities nearly as fast.
Yes.
In SaaS, that's music to my ears.
Right.
Although I didn't have any good SaaS ideas at the time, so I decided to go work for large corporations. And I've done a lot of corporate contracting with like GE and Kohler, both good companies. And I plan to do corporate contracting for about 2 years. That turned into 12, but it really led to what it always takes longer
I
than
know,
you
right?
expect, but unbelievable. But it was good because I got to learn how do publicly traded companies market, operate, and sell. So it was critical education. And at that same time, I got into investing, and I decided to start investing in private companies, so angel investing, which is like I was like, hey, I went through a merger. I'm pretty good at tech. I can totally figure out a good opportunity
Mm-hmm.
investment, get in early, watch it go to 1,000%. Needless to say, that never happens. Like angel investing and venture capital investing are actually pretty hard.
Yeah, I've heard.
As right, like you're going to step up to the plate, you're going to swing 100 times, and you hope one of them is
Mm-hmm.
knocked out of the park, and that one makes up for the losses of the other 99. Essentially, is the model. So
And with angel investing too, you don't really get any say in it, right? You're just giving money and then stepping back.
correct, yeah, you would have to be like an operating partner
Mm-hmm.
in the business to be like you can kind of steer the ship. So I'll get to how I transitioned to the stock market in a second, but I was doing this for about 2 years, and I actually I look back at my time, those 4 years in the agency, and I had a folder on my computer with like, I don't know, it had 400 different folders, one with a different company within, and realized that I pitched 400 companies and closed about 100 deals. So it was about 25% closing ratio.
Pretty good, I would
Um,
think, right?
which was good, but the win was the understanding of business models. At this point, it was the foundation for investing that really helped me, get into investing in general. So, for
Mm-hmm.
example, we served everything from restaurants to automotive detailers to SaaS businesses, e-commerce businesses. I think a hair salon or two, manufacturing companies, a lot of manufacturing companies.
Mm-hmm.
So I knew at that point, like, hey, like if somebody comes to me with a business, like a stock, I can usually in 60 seconds or less now have a pretty good understanding of how the business makes money,
Mm-hmm.
and if it's scalable or not. So if I didn't have those 4 painful years, I wouldn't have that education. So
Right,
anyway,
right.
it was necessary. So go to 2015. I decided let's stop angel investing because that's not working. I was like making some money and losing money, but I knew like guys like Warren Buffett and Charlie Munger, they are able to consistently beat the market. In fact, Warren Buffett, you probably know this, has said if he was managing $1 million or even $10 million, he could make 50% per year consistently. And I'm like, well,
Hmm.
this is not a gambling man. He's not using emotions.
Right.
He's not using feelings. So where is he starting his process? And to me, a solid 10 years now into the software engineering world, I was like, okay, so he's starting with logic. He's probably starting with maths. And I decided, let's go down the rabbit hole. YouTube,
Mhm.
read as many books as I can, a lot of fluff, a lot of wasted, I wouldn't say wasted time, but a lot
You
of
got
dead
to
ends.
sift through a lot of shit to
Yeah,
find what you
right.
like. Yeah.
Like,
Yep.
yeah, and found a guy by the name of Phil Town who actually provided some of the calculus in his books. His books are Rule One. Another book is Payback Time. He's got a third book called Invested, which he wrote with his daughter. And I'm sure that's fine, but Rule 1 and Payback Time provide some of the
Is
calculus.
he
And
is he the guy who did a podcast with his daughter teaching her fundamental analysis?
yeah, that's probably it. Yeah.
Okay. One of our listeners has mentioned that to me. I'm sorry, what were the names of the other two books? You said Rule 1, Payback Time?
Yeah. So Rule 1, Payback Time, and the third book is Invested.
I'm going to make notes just so I can link them in the episode show notes.
Yeah. Yeah. So yeah, I found those books and I'm like, all right. So in Phil Town, for example, he talks about you should be, as if you're investing on your own, you're managing your own money, you should be able to make 15% or more per year.
Mm-hmm.
If no ifs, ands, or buts. I'm like, okay, let's do it. So I decided, this was 2016. It was actually 15 and 16. I created an Excel sheet and I wanted to gamify it with a point system. So I have like definitive yes or no.
Mm-hmm.
Because I don't want to be in this waffling like, is this a good stock? Is this a bad stock? I want to know and then move on to the next if it's not a good stock.
Right.
And created this Excel sheet, which would take me about 10 minutes to analyze a stock. How it works is looking at 5 years of historical data on the financial statements. And by this point, I had a pretty good understanding of what an income statement, cash flow statement, and balance sheet is, because you kind of working in big businesses and project management, you get used to these
Yeah,
numbers.
yeah.
And so I'm like, okay, so this makes a lot of sense. Like we're going back not 1 year, 2 years, but 5 years and creating a lot of rigor with like looking at like revenue, net income, EPS, debt, assets, liabilities, equity, and understanding, are the numbers moving in the right direction or the wrong direction? And the point system between 0 and 100 that I created, and a few other things I tweaked over and above Phil. But I was able, okay, to find some good stocks. First year made 15%, next year made 16%. And then I realized that, hey, I'm beating the market here, yet I had a problem. I was
Mm-hmm.
still holding on to ETFs and index funds, which I realized they're holding me back.
Hmm.
Those products are good if you want to protect your wealth. But if you're still working, and we teach this in Tykr, if you're still working and you have a timeline to achieve, maybe it's financial independence or early retirement, and it's years out, you want to get rid of those bundled products. Maybe hold on if you want some protection, but to really put the gas to the floor and accelerate this thing, you've got to be in individual stocks, Warren Buffett style. So I made 80% my third year. And then since then, my returns on average, we're going about 10 years now, almost investing. My returns per year are about 50%.
Hmm.
And it's nothing glamorous. It's not trading. It's just in like finding really strong stocks and then buying more as much as I can every month at least. And when the market goes down, that's the key. Then this is something Phil Town teaches: stockpiling. You want to make sure you got dry powder available to strike, to buy more when the market goes down. And that's the thing a lot of people can't do because their emotions kick in and they become afraid and they run the other way. It's like, no, you got to buy more. And that's like, for example, in 2020, I made 120%. Well,
Mm-hmm.
how is that possible? The COVID dip
Right.
in February, March, right?
Mm-hmm.
And this year I'm up over 100% because of the recession of 2022 and part of 23. But anyway, used this Excel sheet for 4 years, brings me to 2019, started sharing it with a few people out there, including retail investors and some institutions. And everybody was like, when are you going to turn this into a software? So it's literally like 10 years later
There's
after
your
that first
idea.
business.
Yeah.
There's like, I've got an idea now. 10 years it took.
And it all started on a spreadsheet.
Oh, no kidding. And so it took about a year to build the first version of Tykr. After launch, it took 6 months to get the first paying customer. But I knew that building tech this long,
Mm-hmm.
what you want to do is when you launch a tech business, don't even worry about making money. You want to get people in the door for free, but in return, you want feedback and you want it fast.
Right.
And I'm like, I want 100 customers and I want to know everything that's wrong with my business. I don't care what's right. I want to know what's wrong. So I can make those adjustments.
Right.
And that's how you iterate. And that's product ownership 101 is you find the issues, you fix them, find what people want, keep adding to it. But now as of today, we're live a little over 3 years. We've got over 8,000 customers in about 50 countries. And we're really proud of this. Trustpilot scores a 4.9 out of 5. So I always tell people, like, if you ever hear me talk about Tykr, don't even listen to me. Just go right. Like get me out of the equation. Just go right to Trustpilot, see what our customers have to say. Cause I'm not going to sell you. Like I hate, and you probably do too, when somebody's trying to pitch something or something, it's like, stop.
Yeah.
I don't want to hear it. So I'll talk about the platform, but again, if you're interested, just go check out Trustpilot. But yeah, our model is, so you and your audience know, and then I'll just hand this back to you. We're a screener and educational platform. So if you want to know, like, what's a good stock, like, is Tesla good? Is Tesla bad? Like Apple, Palantir, AMD, Nvidia. You can, like, 30,000 stocks on the platform. We have ETFs we analyze as well. We have crypto. And we have a watch list tools that give you notifications. Like if anything changes, like that game system I mentioned, if a point changes on your stocks, you get notified. I love that feature.
Oh yeah.
Portfolio tracker. We just added a new tool that uses ChatGPT to analyze more of companies for you.
Nice.
Like the meeting. Yep. So it's pretty slick. And we and then education is big. So we've got like daily emails that come out to people. We've got the mobile app coming here in January, and that'll have like educational modules built in. So we like this world. It's kind of like between fintech and ed tech. So layman's terms, like it shows you what to invest in, then teaches you in simple terms, like when to buy, when to sell, how to reduce risk, how do you buy your first stock, really simple stuff that get the beginners, into the market, because everybody's joining Robinhood, or I use TD Ameritrade or E-Trade or whatever. So
Schwab now,
anyway.
right?
Yeah, right. Yeah. Exactly. So anyway, I'll stop there. Longer story than 3 minutes, but I hope it was at least entertaining.
No, yes, very interesting. I do want to ask about your trading style then. So are you long only? Do you only trade shares, or do you trade other products, options, or any of those other?
Yeah, I used to play in the world of options a little bit just to learn it, and I only really support. I don't use this strategy. I only support covered calls because it's really low risk. But I am a straight value investor. I hold, so the audience and I hold 10 stocks in my portfolio, highly focused, and I just keep buying more. I have strong conviction of each, and I buy more. And then when the market goes down, guess what? I buy even more. And that strategy has proven to generate really, really good returns.
So you don't short anything then either. It's just all long.
I do not. It's all long. Yep. Yep. Do you short?
I will, but that's where you use options, I think, because there's a lot less risk.
Yeah. Okay.
When you're holding a put versus, yeah,
for sure. Yeah.
Another thing that I saw that you guys were adding too was a journaling system, and so to see somebody who's put together a platform like this that not only like shows, diamonds in the rough, which was what everybody's looking for, but you also have the education aspect to go with that. And the focus on education and journaling is very refreshing to see, because I don't think nearly enough people highlight that importance.
I appreciate that. This is kind of cool. I kind of described the journal. So it's a journal on every stock. You can make comments, and it creates a timestamp, a score stamp, and a price of the stock stamp at that moment, and then whatever notes you add to it. So you can kind of look at your entries over time and be like, was my prediction or was my analysis, did I say it was going up or down? So it's cool. It creates those timestamps. But I like the comment you made there is, journaling is hot. We need to add it to a more prominent part of the site. So right now you have to click on a stock and then you see it. We want to add it to like the main menu, trade journal. And that way you can see like all the stocks or trade journal entries you've made. So it's a little more efficient to get to.
Yeah, right. That makes sense. So journaling, I've always highlighted as one of like the most important tools out there. The other one I think would be risk management for me. What would you rank like your top 3 skills that an investor should have, or if they want to, be successful?
Top 3, I would say number 1 is controlling your emotions. Like if you we tell people in Tykr, like, you don't have to be the smartest person in the room. You do not have to be an expert at math. But if you can control your emotions, you can make a lot of money. With that, I'll share a quick case study here that is in our Tykr education. A guy by the name of Ronald Reed. You can Google this guy. He's got an article on CNBC, but he's a janitor that built up a portfolio of $8 million. Question is,
wow,
how does somebody who's making close to minimum wage become a multimillionaire? The answer: find really strong value stocks and then keep buying more every month, regardless what the market is doing. This guy had emotional fortitude that he went through. I think he served in World War II. Like a bad day in the market is like another Tuesday. It's like, what are
Right.
you guys freaking out about? It's like, it's that at like, if you can control your emotions, you can do very well regardless of what your income is. It's just, you have to continue buying more. So that's number one, is emotional control. Two is patience. What is Warren Buffett? He has that quote, like, the market is a money transferring machine from the impatient to the patient.
Okay. Yeah, I believe that.
Have you heard that one?
I don't know if I heard
Like
that one, but yeah, that sounds like something he'd say.
one of my favorite. Yeah. So I'd say emotional control, patience, and
His my favorite quote of his is, "Nobody wants to get rich slow."
right. Yeah. Well, you got it. Compound interest doesn't happen overnight,
I
but
know, right?
most, right. Eighth wonder of the world. Number three, I'd say is you got to have courage. And that really applies to the beginner investor, because the hardest part of investing, like I found with talking to our thousands of customers, it's not the getting rich part. It's not finding good stocks like that. There can be some challenge there, but it can be pretty easy depending on who you are. The hardest part is buying that first stock.
Yeah.
It's like, I use an analogy like you're a little kid jumping into the deep end of a swimming pool. I remember that moment. Like, that's terrifying.
Oh, the
Like,
first time off a high dive. Yeah.
yeah,
Yep.
right? Terrifying. But after you do it once, it's actually pretty easy. It's the same thing with buying stocks. So I know your audience may be a little further down the road, but like, courage, like if you have courage, you can do this. Like, you can beat the market. Like, I was so impressed by Phil Town's teaching, and just kind of, now we put it into a software platform that helps you on this journey. Most anybody can beat the market.
Longtime fans of the show should be familiar with the lender formerly known as Sue Pullen, and I'm pleased to announce that she's back, fresh off a rebrand and ready to help as Sue Mackey. Sue is a certified mortgage advisor at Fairway Independent Mortgage, an equal housing lender who focuses on finding the right product for you and your needs. She has over 20 years of experience helping thousands of homeowners. Whether it's purchasing, refinancing, or even a reverse mortgage, Sue will help. Sue's licensed in 36 states now, so reach out and let Sue Mackey it happen for you. The best way to reach her is to just give her a call at 520-977-7904 or in an email, spullen@fairwaymc.com. Fairway Independent Mortgage has an MLS number of 2289. Sue Mackey has an MLS number of 206048. That email again, spullen@fairwaymc.com, and that phone number is 520-977-7904. Shoot Sue an email and let her know she needs to update that address. I want to go back to something you just said there about managing emotions. Can you tell me like how that process works for you?
Yes. So I'll give you a few case studies here on situations where I could have lost money. Now, this is a Warren Buffett quote: "Rule one, investing. Rule one, don't lose money. Rule two,
Remember
don't
rule
forget
one.
rule one." It's like, right. It's like Fight Club. Like,
Yep.
first rule of Fight Club, don't. So this was like back in 2016 or 17. I bought Rollins. Rollins, think of like Orkin. They kill insects.
Okay, yeah.
Right. Think of like centipedes or termites, whatever. But they're a cool business model where they'll buy their competitors. Like, let's create that wide moat, make sure people can't duplicate us. Let's just buy them. Love it. Love that model. And their financials were pretty good in this Excel sheet. I bought the stock. Earnings report came out. Their score went down. The share price went down. And now the share price was below my cost basis or average buy price. What do I do? So option one is I can freak out and sell for a loss, or option two, remember rule one, investing. I decided, let's go with rule one and ride this thing out. What happens is, I think it was like 3 or 6 months or something, the market, it just kind of rallied a little bit in a rising tide. I know the guys at Motley Fool always say this: a rising tide lifts all ships.
Yep.
And I love that, because the market will lift things up, even if they're not great businesses at a given moment. They'll lift it back up. Well, sure enough, the share price went above my cost basis. At that moment, I sold for a profit, put in other stocks. Year later, same thing happened with Callaway Golf. I play golf. I'm not going pro anytime soon, but
me neither.
But I enjoy the sports, and right, Callaway, the golf bags and golf clubs and shoes and hats and all that stuff. And same thing, bought the business, score changed, stock went down lower than my cost basis. And I think I waited 9 months in that case. But it's like, you know what? If you got a situation where stock went down, you ride it out. Rule one investing. So in my case, believe it or not, I refuse to lose money in the stock market. In fact, I don't lose money in the stock market because I do not sell for a loss. I make sure I buy strong businesses and make sure the market lifts them back up. And if I want to sell it, that's when I'll sell for a profit.
So what would you do if the company just continued to crater, or if your analysis changed? Like how do you manage risk in that scenario then?
Yes. So that relates to how you get into a stock in the first place. And I do want to emphasize this.
Mm-hmm.
And Phil, Warren Buffett has talked about this a little bit too, but invest in businesses you know.
Yep.
Phil Town took it a step further and talks about the 4 M's of investing, which are, he doesn't use the same order as us, but we place a high emphasis on this, which is the math part of investing is the first M, which is the margin of safety.
Mm-hmm.
That encompasses our Tykr. There's a summary, score, and margin of safety all in one. Really easy to understand. That's the math part. But an investor should never start and stop with the math because business is more than just math.
Mm-hmm.
You have to move on to the meaning, moat, and management. The meaning is the business model. How many revenue streams does the company have? How scalable are those revenue streams? Then you have the moat. How does a company stack up against other companies in the same sector and industry? And then you have the management, which is a track record of the CEO. I kind of look at that last M like, let's say you're the GM of a football team and you want to win a Super Bowl. Do you go looking for a quarterback at the local high school? Or do you
Right.
go to another team that has a quarterback that already won a Super Bowl before?
Mm-hmm.
Like, you want a CEO that's been there, done that. So anyway, the question is, how does somebody do the 4M? Well, this is where ChatGPT has come in, and we put together the new 4M, which is powered by ChatGPT, so it handles all 4Ms for you. It kind of walks you through in this gamified experience, but I make sure I only invest in businesses that have a high 4M rating.
Mm-hmm.
So in most cases, when you do that, this is a ship that's not going to fall, like going to sink. Like it's a strong company. And if it goes down a little bit, it's mainly going down because the market's going down.
Mm-hmm.
And that's what you want. So in most cases, I buy these high 4M stocks, and yes, they may go down for a moment, but they're going to correct and go back up. So it removes that situation where people think they're investing in a strong company, but it can be a complete dud, take a nosedive, and never recover thereafter. Like, you want to avoid that situation in the front, and that's why the 4M, it reduces that risk for you.
Right. There's less of those, I don't know, meme stock type scenarios where, yeah.
Those fail. Like, for example, GameStop, AMC,
Mm-hmm.
Cost, anybody who works there or likes those brands, I'm sorry. I mean, they're probably neat in some ways, but like, come on, they're not strong stocks.
Yeah. What is the 4M score of GameStop right now? I wonder.
I'll give you the ranges and I'll tell you where it's at because I just did it like yesterday. So it's a 100-point scale, kind of like the it would be our score for stocks, but this is the margin of safety, or this is the 4M score. If you can get 80 or higher, that's like a definitive green light. You've got a really strong business.
Mm-hmm.
If it's between 60 and 79, moderate confidence, you can still move forward, but you better know this business. And then anything that's 59 or lower is red. That is
Okay.
like, you want to avoid like the plague. And getting in 59 or lower, that's pretty bad. And GameStop, last time I did it, was a 45.
It's not as bad as I thought it could be. What's Salesforce by comparison? That's been a solid one for me over the years.
Is this video or is this audio only?
I'm recording video, but we put this out audio only.
Okay.
I'll do clips with the video though.
I'm going to share my screen.
Oh, nice. Should be able to do that.
Can you see Tykr?
Now I can. Yes.
Yeah. Okay. This will give you guys a better picture of what you're looking at here. So here's Apple, for example. We'll start with this stock. So you've got a stock is either on sale, watch, or overpriced. You can see Apple's watch because of the margin of safety is a little lower.
Mm-hmm.
I'll give context there. So a stock is on sale, and I'll show you, like, I'll go to my watch list here so you can get an idea of what's what. But you've got so Airbnb is actually on sale. You've got AMN Healthcare, I see, is on sale. Got here we go, Chipotle, nice, on sale.
What's Chipotle trading at now? 2,300. Jesus.
Yeah, right. That
Yeah.
share price is up there. So you've got, I'll jump back to Apple here. So a stock is on sale if the score is 50 or higher and the margin of safety is 50% or higher. The margin of safety, what we do there is we calculate the fair value using the EPS growth rate over 4 or 5 years.
Mm-hmm.
If we can't get that many years, like for example, it's an IPO stock, we try to get a minimum of 3 quarters. So those are the main numbers. Then you have the 4M here in the dead center. You can see here, that's pretty good. Like
Mm-hmm.
84 on Apple solid. We'll go to the 4M confidence booster page. We'll see people are starting to do different, and the score will be different each time. The reason is we look at different companies in the same sector and industry. So for example, let's go to CRM.
Okay,
We
so
can just
like
run
if
through this.
how it's performing relative to its own sector is
Yeah, yeah.
gotcha.
So here's a demo of how this works. So it sets the tone, like what are we doing here? You've got margin of safety, meaning moat and management. What do each of those mean? And we'll go to get started. Here's because you got to gamify it.
Right.
Like what
Yeah.
score are you going for? Yep. So we're going for 100. I went through those earlier. Low, anything 59 or lower is low. All right. So here we go. We're getting started. So margin of safety, we can see we're at 61, which is pretty good. But the margin of safety in Salesforce is 0. This tells us that EPS, the profitability, is not increasing as much as we'd like. So that's why it's watched.
Gotcha.
Doesn't mean it's a bad stock, but it's just worth paying attention to. Then we get to the meaning. This we had an old forum in the past. You kind of had to do your homework on this on your own, but check this out. We'll let AI go to work. It's
Huh.
going to take a few seconds and then it's going to start typing. Here we go. I love that software as a service.
Uh-huh.
So it gives you a nice summary of the business model. How does it make money? How many different revenue streams? This is important because you don't want to invest in a company that has one revenue stream. If that leg of the table is pulled out, you have an issue.
Right.
All right. So the revenue scalability it's a 3.7. It could be better. We look at the scalability, but we also look at the profitability behind the scenes, including like return on invested capital,
Mm-hmm.
return on assets, return on equity. That's more behind the scenes stuff, but it could be a touch better. I've seen better. And this, just for context of this 4M is very rigorous. I've never gotten 100 out of 100. That's probably
Okay.
impossible. So it's very, very hard. Yeah.
That's probably a
All
good
right.
thing then. That means that your scale is right, probably.
Make it hard, create a lot of rigor. Software engineering and
Right.
corporate world really teaches you that. All right. We use the alpha to compare against the market. So
Okay.
you can see they have outperformed the market the last 5 years. That's great. All right. So with the meaning of the business model, this is important as Warren Buffett states, wise investors should invest in what they know. I would
Mm-hmm.
say I know Salesforce very well, so I'm going to put very high. I always tell my audience this. I usually go very low for pharma. I don't love pharma because government regulations can tank a pharma company
Oh yeah.
overnight, right?
Mm-hmm.
And I also don't know enough about the manufacturing processes. I really don't know enough, so I always put very low for pharma.
All I know with pharma is the cost to get a drug to market is so extremely high and so fraught with risk that it's really it's really like throwing darts.
Right? Like anybody comes to me with like a business idea and they say, I want to start a pharma business. I'm like, no, no, you don't.
Yeah.
Try again.
Right.
This is pretty cool. This is the mode screen. Prior version of 4M, you had to do it manually. Now check this out. It will grab 4 other companies in the same sector in industry, and then it ranks them in 5 different categories. So let's see where this ranks up against. In the summary, we can see we're tied for first with watch. The score, we're tied. Oh, nice. We're second. There's a tie for third
That's
there.
funny that
Okay.
Lyft is in that group. I wouldn't have picked Lyft to.
I know it is in the same sector industry. So one of the two.
Mm-hmm.
Okay. So with this, the score, they're second place, decent margin of safety. Yeah, they're 0. So they're tied for third.
Mm-hmm.
Revenue scalability. Okay. So they're second. That's pretty good against the others. And then alpha, we can see they are third.
It's really slick. I kind of like this.
Nice. Thank
That's
you.
a lot of information, like right at your fingertips there, and it looks like it's useful information. Like ranking against peers is definitely something that I don't think people
Yeah.
do enough of. I know I don't. Starting to
Sure.
now as I learn more.
Well, I'll show you other parts of the tool here in a second. because I'm actually curious myself to see what kind of score we get. All right, so that was the
Mm-hmm.
moat. Now we're at management. We're almost done. Similar to the beginning, AI is going to go to work, wants to find out the accomplishments of management. How effective is management? And we also use that, like I said earlier, that return on invested capital, return on assets, because they're actually good numerical measures or tools to measure a CEO's impact. You can see here a little low, 2.5. Okay, so it could be a bit better there with Mark.
I wondered, 'cause I was actually expecting that to be a little low because don't they go through that? Like they had the co-CEO thing going on for a while that kind of failed,
Yes,
and it seems like every time they trained a replacement for Mark Bidoff, is that his name?
Benioff. Yeah,
Benioff. It
Benioff.
seems
You
like
got
every
it.
time they train a replacement for him, he ends up leaving because Mark doesn't want to leave either.
I want to see. I want a co-CEO, but I don't. Like
Right.
which is it? That's
Yeah, exactly.
that's how that goes.
It's hard to keep good leadership though if there's nowhere to go. If you can't go up.
Yes, yes. This is our last screen before we get the final score. So
I
we actually
love that.
used the glass door.
Yeah.
So yeah, you'll love this. So check this out. This took a little homework, but get this: stocks with a company score greater than 3.7 on average outperform the market by 6%, and stocks with a
Hmm.
CEO approval greater than 73% have on average outperformed the market by 8%. So it tells you that happier employees actually produce better returns in the market.
That's shocking, especially when you're doing a customer service based model.
Right? Like,
Right.
let's treat our employees with respect. How about that?
Exactly.
Um, it is one of those things like we talked to Glassdoor, like, hey, do you have a API so we can connect you directly and just do this for our customers? And the answer is no, they do not.
Hmm.
So we do link over. You can skip this step so people can reduce the friction, and we'll kind of use calculations behind the scenes. But in this case, I'll just punch in actually 4.1 and a 77. So that does beat both numbers actually.
Yeah.
So they're not too mad, but
Hmm.
room for improvement. All right, let's see what we get. 58. Interesting. Okay, so
Okay.
um, the margin of safety could be a lot better. We do know that. The meaning of the
Hmm.
moat, that's the strong part of this model, but the management margin of safety a bit low. So this is actually 58, that 59 or lower. So I would maybe look for other stocks. Doesn't mean like if you're holding the stock, if you should sell it, I'd probably ride it up. But
Just means don't be looking to add just yet. There's going to be a better
yeah,
opportunity.
it exactly.
And yeah, that's the other thing that, like you just said there, like there's no absolutes when it comes to investing or the stock market.
Yeah.
There's only probabilities. You want as many winds blowing in your direction as you can.
That's yeah, you nailed it. It's our audience resonates with one key word more than anything, and that's confidence. Like the more
Hmm.
confidence they can have moving forward, great. So with that in mind, you got this main page here. You can kind of like this is the one chart we have because we don't do trading. We're all about value investing.
Hmm.
Let's go ahead to we do have analyst ratings. You can see what other analysts are saying where the stock is going, like potential price targets, financials charts.
Do you invert the? I have a hard time trusting an analyst anymore these days. Every time I see somebody talking about trying to talk up a stock, I'm more worried about them trying to sell it to me.
You know what? You're right. That's why we don't factor analyst ratings into our ticker score because we only look at the numbers. Just cut right to the
Hmm.
math there, and then the 4M looks at, of course, with a little help from ChatGPT, looks like at the revenue streams and CEO and whatnot. But here's you can get an idea what the charts look like. We look at, like I mentioned, revenue, net income, EPS, but you can kind of flip through those. We have earnings calendar. This is cool because you can click these little calendars and add it right to your like I use Google Calendar, but you can pick your
Oh, that's
calendar.
neat. Yeah,
Yeah, so you get notifications the day of like, hey, here's today. Apple's earnings report is today.
that's
You have
awesome.
ratios. This is interesting for some people. You can see their executive compensation. See
Oh
what
yeah.
people are earning. Holdings. This is kind of cool. You can see in the last 24 hours, like okay, so or the last change, I should say, like Vanguard. When did they add more or get rid of?
Oh, that's super interesting. Do you have
Here's
insiders on there
your
too?
not insiders yet. That's on
Okay.
our roadmap.
Yeah.
Here's that trade journal. You mentioned, I'll just say note for CRM. With today's date, you add a note and it will stick. It'll show that summary,
Hmm.
score, and margin of safety all right there. It's stamped. And of course, you can pin it if you want to pin to the top or you want to edit or delete. So
I assume you can sort all those notes by like Tykr. So like that note is attached to Salesforce. If I wanted to go look and see at all my Salesforce notes, I could pull those up.
that's what we're going to be working on is adding it to our left nav here. So
Yeah.
you could click trade journal. Yeah, right now it's just sitting. It's embedded within one of the
Hmm.
whatever stock you go to. So yeah, like the left nav here will give you good perspective, like ETFs, crypto. Now crypto we don't analyze. We just use it as a marketing play to bring crypto traders into our platform.
Right.
Um, and it you can create alerts against it. Like for example, down here you can set alerts on stocks, ETFs, and crypto. So you keep everything in one location. That's one thing that bugs me about like Yahoo Finance and other platforms is like I want all my alerts in one clean location. Is that too much to ask
Right.
for?
Oh God, yeah,
So
that's a great point.
yeah, I've got that all right here. And then the portfolio trackers, I've got different portfolios I created here, and yeah, I'll show you one more thing here. The ETFs. This is kind of cool. We'll go to this one here. iShares Semiconductor. It shows a breakdown of like how many on sale stocks. Looks like 51%. How many watch? How many overpriced?
Oh, that's really cool.
And then you can see like the top holdings. Like what's the
Hmm.
weight, and then what is that stock? Like, okay, that's an on sale stock, and it's got a 78, and you can see the industry and sector as well. So yeah, a bunch of cool stuff within. So
I can't imagine what that spreadsheet looked like before you turn this into the
it
platform.
it was it was actually just the stocks table. Right now, you'll see this pop up. We've got a little, yeah, about 31,000 stocks, but you can create whatever filters you want, and then you can save those filters. Like for example, let's go to like hidden gems. This is on sale mid cap stocks in the US currency. You can see that brought it down to 307. So those, for example, these might be cool like breakout stocks to really pay attention to.
Hmm.
But it's cool. It's saved. But yeah, the Excel sheet was really just this
Right.
screen you see here without fancy filters and column. You can like rearrange columns. People love doing that.
Oh, I do.
Yeah, exactly. Turn them on and off, like if you
Hmm.
want to get rid of noise, right? And then on the left here, you can see you can add notes, you can add alerts, all like one clean location. So yeah, that was the Excel sheet was the first version of this screen here. Cool.
That's pretty impressive what you put together there.
Thank you.
So the website again is Tykr. People want to check that out. Tykr.com.
Tykr.com.
You guys got any deals or specials going?
Yes, actually, we do have a special right now for any yearly plan. Use top 50 to get 50% off. Top 50.
Top
Yep.
50.
Yep. You got to capitalize TOP, and that'll get you 50% off for a year on any yearly plan. And that'll be important because a lot of people are looking forward to that mobile app coming here in January.
Mm. Yeah, and it looks like you got other stuff coming in soon. Looking at your
Roadmap.
features
Yeah.
sheet here too.
Cool.
All right, before we get too far out of here, I do want to touch on the podcast and,
Sure.
and kind of ask you about that. So you've been doing Payback Time for it looks like about 3 years now.
Launched it pretty much the same time as Tykr, and Payback Time it's kind of a wider spectrum than just stock investing. It's really all focused on building businesses, building wealth, creating passive income. So I do interview people who, maybe they're building a SaaS business, maybe e-commerce, maybe a service business. And how are they
Hmm.
scaling those? Even I've interviewed real estate investors, venture capitalists.
I've seen quite a bit of crossover between your guests and ours. I think Kevin Jefferson was
Yeah,
the most recent one that I saw that we'd talked to. He actually is the one who helped us name the show here. He sent us in a note
nice.
suggesting the Band of Traders name. Yeah.
Sweet. I'm actually doing a webinar with him in January. Great guy.
Oh, that's awesome. Yeah, I'm hoping to do something with him about forex, like maybe like a deep dive
Sweet.
mini series into trading them. Yeah.
Yeah, he'll actually speak to my audience about how to safely start trading because people want to get into this space, and I always tell our audience be careful, but yeah.
Yeah.
Payback Time podcast. It'll teach you more about building business. If you want business ideas on like if, for example, we got a lot of people that work a corporate job. How do I get out of that corporate job and create my own business? Well,
Yeah.
our podcast will give you a bunch of cool ideas. We interview some franchise consultants, non-food, and we're talking franchises like setting up like little door blockers in corporations where there's no customer service, but the corporation pays you a monthly reoccurring fee just to have these door stoppers, or I would call them more like construction blockers or separators. I'm like, talk about a simple business model that can make a lot of money with no customer service.
Right.
Like music to my ears.
I know, right? Yeah, my blocker's
Yeah,
broken.
right. Like it's a
Yeah,
piece of
it doesn't
plastic
happen.
that separates two walls that are
Right.
under construction. That's it. But it's like you don't think of that. And another company that does like the lines in parking lots, like
Oh,
throw
yeah,
on a
okay.
podcast. I'm gonna make some lines. It's gonna take me all day,
Mm-hmm.
but like a to-do job like that, that's a lot of money. So it's another franchise idea.
There's a lot of opportunities out there. I think
Yeah,
that's the lesson to learn, right?
for sure.
All right. Well, I think we're getting probably close to the end of our time here. Do you have anything else that you want to say before we wrap this thing up?
Anybody wants to get started with Tykr, it's a 14-day free trial, no credit card. So we try to lower that barrier to entry, like get in, give it a test drive, and if you like it, then you can stick around thereafter.
No credit card is amazing. I love hearing that.
I tell you what, even Adobe, they make you add a credit card. Like you want to try any of their product.
Oh,
I'm like,
everyone
come
does.
on, you're raising the barrier to entry. You got to get rid of that step.
Yes.
Yeah,
If you believe in your product, get people in there. They'll like it. If they like it, they'll pay for it.
exactly. Like as I said earlier, I should never sell Tykr. Like let our customers speak for itself.
Yep. Yep. I love it, man. I love it. All right, but unfortunately, we have come to the end of our time here with Sean today. But that is no reason to be sad because there are hundreds of episodes of Payback Time that you can binge if you want Sean's voice to continue massaging your eardrums. We'll be sure to include all those links along with the link to Tykr in the episode description. That's tykr.com. We'll have those there just for you guys. We'll be back soon with another exciting episode. But until that day, help us have a happy new year by smashing that 5-star button and have a great 2024. This podcast is intended for informational and educational purposes only. It does not constitute financial or investment advice and should not be construed as such. The hosts, guests, and contributors of this podcast are not licensed financial advisors, brokers, or professionals. Any trading or investment decisions made based on the content of this podcast are solely at the listener's discretion and risk. Trading and investing in financial markets carry inherent risks, and past performance is not indicative of future results. Listeners should conduct their own research and seek advice from qualified financial professionals before making any financial decisions. The views, opinions, and information shared in this podcast are those of the individual contributors and do not necessarily reflect the views or policies of the podcast creators or associated organizations. Produced by China Shop Productions.